Hi, my name is Jonathan. I founded SPV Mortgages, which is a limited company mortgage brokerage, as well as the Buy-to-Let platform, which is the UK's first property and mortgage sourcing platform designed exclusively for property investors. Now in this video, I'm going to be talking about a beginner's guide to starting in property investing. I'm going to break the video into 5 sections. So the first is ownership structure. The second, goals. The third, mortgage pre-approval. The fourth, geographical location. And the fifth, viewings. Ownership structures. So there are multiple ownership structures that you can review when thinking about investing in property. Now, the best advice that I can give you after dealing with hundreds of property investors and working with them to build successful portfolios is we've got to look at an ownership structure which is firstly tax efficient for you, but secondly has access to the most amount of lenders in the marketplace. So to give you an example, there are 2 main ownership structures which we're going to be focusing in on this video. One is personal ownership. So with personal ownership, you have access to 100% of lenders that cater for the buy-to-let marketplace. The second is limited company ownership, in other words, special purpose vehicle ownership, or SPV ownership. Now, SPV lenders are limited in size in comparison to the overall market. However, you do get access to 100% of the limited company market space with a special purpose vehicle. Now, when you're looking at limited liability partnerships, trading companies, trusts, and perhaps there's a few others out there as well that perhaps I haven't come across, you limit yourself to the number of lenders that you can move forwards with. Now, the point being is we've got to choose an ownership structure that has access to as many lenders as possible so you can get access to the cheapest money on a regular basis. So it's not just the cheapest money for one acquisition, it's the cheapest money moving forwards from that acquisition. Because in 2 to 5 years' time, you're going to be refinancing, you might release some equity to expand your portfolio, you might buy more, you might buy less. Whatever the case may be that fits your ultimate goals, you need access to the cheapest money at all times. So the 2 ownership structures that you want to consider is either personal or limited company. Now, in regards to the difference when we're looking at taxation, if you speak to an accountant, most accountants will say if you are a lower rate taxpayer and the probability of you becoming a higher rate taxpayer is quite low, then buy the property in your personal name. There's no benefit buying in a limited company structure. If, however, you're a higher rate taxpayer or you're approaching the higher rate of tax, then buy it in the company structure, because the taxation through the company structure is a lot less than obviously on the personal side. There is a caveat to that though. And the caveat is if you're buying through a limited company, but you're withdrawing the profits from that limited company to increase your standard of living, then most accountants will say buy it in your personal name, pay the tax bill, and don't worry too much about a limited company structure. However, if you're not looking to withdraw the profits from a limited company structure to increase your standard of living, then perhaps the limited company structure would be best for you. Property investment goals. So what I'm referring to here is think about why you're getting involved with property investing. Why are you investing in the first place? And think about it over a very long time horizon. Don't just think, right, I've got this cash in my bank account, I need to invest it in something. Property seems to be a safe asset class for me, and go out there and buy your first buy-to-let. What I would recommend is just take a step back and think to yourself, right, what is it that I want to gain over the next 5 years, 10 years, 15, 20, 25, 30? And then work back from those goals. So for example, you would have come across lots of commentary around capital appreciation versus rental yield. Now, capital appreciation builds wealth. So what that does for us is it just makes us feel great. Okay, when the value of our assets go up, we feel really good. But yield provides us with a certain lifestyle. Now, if you're like any of our clients at SPV Mortgages, whereby they are investing to protect their future because at some point they want to move away from what they're doing right now, so what they're doing right now to earn money, and they want their property investments to replace that source of money, then what you want to do is think about buying properties that perhaps increase in value or not, but also generate a yield that's going to be sufficient for you to replace your income at a later date. Okay, so once you've decided on the ownership structure and you've kind of set yourself some goals, whether that be capital appreciation, yield, or a combination of the two. The next stage is mortgage pre-approval. Now what I mean by that is get in touch with a specialist mortgage broker, go through their process and understand what your eligibility is. Now the goal here is to get access to as many lenders as you possibly can. That will guarantee that the time that you have an offer accepted on a property, you will get access to the cheapest money. And that's really, really important because the cost of debt on property investments really is the most fundamental point that we need to look at as investors. We need to ensure that that cost of debt is appropriate based upon our goals. Geographical location. So geographical location should be linked directly to your goals. So if your goals are to invest in properties that are high yielding, you want to target an area that has high yielding properties. On the flip side, if you want to target areas which have a low yield but maybe a higher capital appreciation prospect than most of the country, then focus on that particular area. Now, once you've identified that geographical area which is in budget, and if you need help with that, there's a wonderful tool, it's called the Buy to Let platform. You can go on it for free and you can check exactly what you can buy in these geographical areas based upon the amount of capital that you have to invest with. The platform carries out all the calculations for you automatically. There's a link at the bottom of the video here. Once you've done that, then what you need to decide is what type of property you want to purchase within that area. And the best way to do that really is to link the amount of money that you have to the type of property that's available in that area, which the platform will do for you automatically. Now, after that, you want to be doing some research in regards to tenants. So for example, this is the type of property that you can buy, maybe a 2-bed or 3-bedroom house, or 2-bedroom, 1-bedroom flat. What tenant is going to be looking to rent that specific type of property? That's really important as well because tenant profile is quite key to the success of you building a property portfolio. So first thing, geographical location, that is linked to your underlying goals. That could be a combination of capital appreciation and yield or capital appreciation solely. Work out what type of property you want to invest in, whether that be houses or flats and the number of bedrooms, and then take it to another level whereby you start looking at the type of tenant. Start viewing. So we've got our ownership structure locked down, we've got our goals in place, we've got mortgage pre-approval, and you've now targeted a specific geographical location. Now what you want to do is you want to shortlist certain properties, perhaps on the Buy to Let platform or on Rightmove, on Zoopla, or on the market, any property sourcing platform that provides you with the data sets that you need to make a viable property investment buying decision. Once you've shortlisted those properties, pick up the phone, speak to the agents and go and start seeing them. Knowledge is key, and I can tell you that our most successful clients at SPV Mortgages that have built multi-million pound property portfolios, they don't deviate from geographical location. They are experts within that location and their whole portfolio is built basically in that location. So in other words, you have to become an expert in the location that you're targeting. And the best way to do that, shortlist some properties, pick up the phone, speak to agents and go see them. So here's a bonus for you. We've not touched upon property investment data sets. And what I mean by that is, if you are to take a certain amount of money that you have, so your capital allowance, and you're looking to purchase a specific property with that, we've got to understand, well, what is the net profit that property is going to be generating? Because that then means that we can target a specific property within that geographical area that perhaps has a higher yield than others. Now, the Buy to Let platform, link below, has all data sets built into it automatically. So because we understand the cost of the debt, because we have live feeds coming in from limited company lenders that update twice a day, we can automatically backtrack from rental income, tax, running costs, maintenance costs, net yields, net cash returns. So with the platform, all you need to do is just tell it the amount of money that you have to invest with, the geographical location that you want to invest in, and the platform will automatically calculate all of the data points that you need in order to make that buying decision. Shortlist the properties so you can literally favorite them on the platform and then obviously go and see them. If something takes your fancy, make an offer, get in touch with your specialist mortgage consultant, keep them in the loop that you're making an offer and start the negotiations. I hope you've really enjoyed the video. I hope you've liked the content. Please give me a thumbs up, subscribe. Every Friday I launch a new video, and thank you so much for supporting my channel. All the links at the bottom of the description, and I will see you in the next one.